Hello, everybody. All right, so let's quickly review the markets today and just analyze, the key behaviors and what we can learn from them. All right, so in the morning, the ES went up and it broke this high with a breakout and basically put itself in an up thrust position. When it went into an up thrust position, I was looking for a sell, but it just didn't happen because these numbers weren't strong enough, and just didn't I didn't have enough conviction to short. So because it's 1.7 times average down volume, biggest in uh, four down waves, that is selling pressure, but it's not massive selling pressure, and it was still at that support level. After that, though, it broke down heavy on the biggest in 11 down waves and 2.1 times average down volume. So now on a test of this, you have a valid area to short, but the way it came back up was ridiculous because this is not a test, and this is not a pullback. This is buying activity. All right, so there's no point in taking a short here. And even though it made the slightly lower low, the idea is that the buyers are in. So sellers came in here, pushed it down, buyers came in, and now it's just a matter of where the reversal is going to be. And what happened was prices went lower, they went lower, they went here, and here this price started, the volume started drying up. How do you know? How do you know volume started drying up? You can see in the numbers here, but also you can see here. From this much to this much to this much to this much to this much, the selling pressure is weakening. There's no selling pressure. It is gone. So the trend of the selling pressure is declining. And with this in the background, it was only a matter of time until the reversal was going to happen. So right here, because if you don't have volume, how is it going to continue to go down? So this was a little tricky because they keep springing and all of that. This is one green bar here. This was, I would say, the trigger, but there's not enough. There's still too much supply. Why this green bar is because the biggest thrust in 59 bars. This one right here. All right. The only problem is there's still some pressure. There's still some supply. This one here I really like because it's less than average down volume, and it's the biggest thrust in 14 bars. This biggest thrust in 14 bars. It's 1.34 times average thrust, and is weakening. Supply is weakening. Demand is coming back in, and that's what initiated this move. All right. So let's just take a look on the tapering chart. I can't really tell anything. I mean, I really just couldn't tell anything. The only thing is there's some volume coming in here. So this volume, this volume here is this sideways action that went and created this rally. That's this. So there's some. You can say it's some accumulation. How you know is that it went up. Did a little spring and had a big thrust and went up. So there is some accumulation, but after that, it ensured that it kept sweeping. It kept running any early buyers, especially after this move. It's the biggest biggest in 59 bars. So you don't expect the low to be taken, but it was taken. And the reason is that supply is still in the background. So the only time the supply dries up is right here. And then once it dries up, you take any of the green bars and bang, get a move. It's not a big move, but it's a move nonetheless. All right. Now the other trade that was really amazing was in the morning here. Right. This. All right. So I'll explain what this behavior is. So you see this going up, 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 and you see the volume diminishing. So there are two key behaviors that you need to know. One is shortening of the thrust, and the second is clustered waves. So shortening of the thrust and clustered waves. The concept of clustered waves is just like clustered closes, where you have the closes in a daily bar chart hugging each other, not making any progress in the closes. Similarly, these are clustered waves, where you have the highs and lows that are clustered together, up, down, up, down, up, down. They're all clustered in close proximity. There's no progress in the highs and no progress in the lows. They're clustered. So you have shortening of the thrust and clustered waves, and then you have this break. But there was something else I saw here which made this very high probability. I'll go to the crude market, and it's this. This here. Look at all the effort here. See this effort? That's the effort. Look at all the volume in that little area. That's all selling. That's all. That's all selling. That's distribution. So you had effort. Now, do you just take the trade after effort? No, you don't, because the effort could be absorption to go higher. You need to see a reversal, right? So you have all this effort. You have effort, right? All this effort, but it doesn't mean jack until you have a directional clarity. So it could be absorption and just bust right through. But right here, you would know that this is distribution because it yielded markdown, right? So unfortunately, though, even though you had this breakdown here, it didn't pull back. It didn't pull back. So no trade, no trade. And of course, it just went to the support level. What level it was. Anyway, so you get the idea, all right? So you had effort, which was the distribution, because what's happening is price is trying to go up and sellers are there and they're just selling right into the buyers. And that's why you have this volume going up and a little area that's stuffing, right? All right, now we're done with crude, done with the ES. So what is the lesson with the crude is three things. One, clustered waves, and shortening of the thrust. You can see from high to high to high. Shortening the volumes that don't make any progress. After that, you have clustered waves, you have shortening of thrust, and you have effort. So those are three lessons that you need to see. If you don't have this type of chart, you can just use any volume by price chart, and it'll show you this. All right, and with the ES, the key lesson is that after you had 2.2 times average up volume, you have to wait for supply to diminish, and this is where it diminishes. So you had all this buying activity, but there's sellers still in the background, and they keep selling until this point where supply dries up. And this is the signature of supply drying up. See this? This is the signature of supply drying up. All right, let's move to, oh yeah, Euro. This was also, here you had the market going up, right? And then you had some selling, but I'm not impressed until here. This is impressive. 2.5 times average down volume, biggest in 13 down waves. This is a break. This is a break. Price goes up, retests, demand dries up, and then it goes down. Retest that same area again. Demand dries up, reversal, down she goes. So nothing really more to it. Although, after this 2.2 times average up volume, I would get skeptical because there's no way that this kind of volume could be a pullback. These are not pullbacks. If you have that kind of volume coming in, there's some covering or some accumulation. It's abnormal volume to be this much to be a pullback. 1.4, okay, 1.3, 1.4, that's normal. But when it comes to 2.2, it's not normal. All right, and we'll just take a look at the euro to see if there were any other, if there was effort. There it is, right there. So this is the effort right here. We see this little thing pop and then drop. So remember, the effort and all of that, it doesn't mean jack until the break. So this is the effort or the distribution, and this is the break. You need to see the distribution, then you need to see a break. All right? And that happened in the euro, so that makes me confident of taking a short. All right, let's move on to gold. It's nothing. I don't see anything. It's really nothing. All right, copper. Copper is going crazy. There's a lot of opportunities here. This selling had me interested initially, but this is another lesson. When a market breaks, you don't just think of shorting, because you need to see the response. Are they going to buy the break? Are they going to buy the break? And this is a very strong market, and what you see is they bought the break. So whenever a market breaks out or whatever, you need to see how it pulls back. 1.8 is not weak. So that means that the buyers that were in this support area, they bought this attempted selling. This selling came, and then from this breakout area, they bought it, and it went up. And finally, we go into natural gas. Natural gas was, I missed this by, I don't know, it's ridiculous. I don't know how I missed it, but anyway. So nat gas, this was the first potential turn was right here. Right, so you have a breakout, and it's 1.9 times average up volume. Now remember, anytime you have a breakout, rally, strong, sign of strength, whatever, it is incomplete until you see if it's going to get what the other side is going to do. In this case, since you have a bull rally, you want to see if that bull rally is going to be sold or not. And it was sold. So over here, do nothing, do nothing, do nothing, do nothing, and bang. Bull rally. If you didn't see any of this, you say this is very, very bullish. Right? Very bullish, takes out the 1, 2, 3 prior highs, 1.9 times average up volume, biggest in 7 waves. But remember, you have to see the response of the other side. And the other side just sold it off. And they sold, and they sold some more, and they kept selling. Here, what interested me was this. 1.8 times average up volume came in right here. And then finally, this, which is 0.2. That means there's no supply. No supply. No supply. And then this thrust after no supply was the markup, initiating markup, which is the biggest thrust in 23 bars, 1.57 times the average thrust right here, this bar. And that initiated that move. Typically, I could care less if this is 1.7 or this or that, but there was something about this when when you see this. And if you don't get in here, like this is also really good right here. In fact, when this market pulls back, it might just hold these areas because maybe they're just covering their shorts, but this is significant volume, and it gets me very interested because in the Wyckoff method, you're tailing the composite man, and composite man is buying, so you buy, selling, you sell, and this is buying. It's buying activity. We'll just take a look. I don't really see any effort here, but this is the buying activity right here. This could be climactic. You have all that volume, and specifically, if the volume is at the bottom, the sellers, they're not going to sell at the bottom. They're going to sell high and the breakdown. Here, selling. Here, selling. Here, either covering or accumulation because it's at the lows. Who's going to sell the lows? Right? So someone's buying those lows as the price goes down. Someone's buying it, and typically you get a bounce. Like, someone's buying, you get a bounce. Got this, bang, right up. All right, so I've gone over a bunch of stuff. Nat gas, I have to see a little bit more to see. And why I'm interested in this now is because, take a look. It took out these lows, and I think it did a spring of these lows. See that? So again, you have to view it, if it's an uptrend and downtrend and all the other factors. But clearly, when it got to that area, right, when it got here into this position, someone's buying this spring. 3.7 times average up volume, biggest in 49 up waves. It attempts to break, someone's buying the break, and that's what's happening right now. Someone bought the attempted breakdown of the nat gas when it broke 3.862. It broke 3.862 and went down to 3.827. All of a sudden, someone bought a little bit here, dried up here. Sellers have no follow through, and buying activity comes in with 3.7 times average up volume, biggest in 49 up waves. They're buying the weakness. See? So that's why I'm interested in it. And we'll see what happens next, but that's the idea. All right, folks, have a good day. Bye.